U.S.-South Korea trade deal.
Welcome to the Deep Dive. We're the show that cuts through the noise, aiming to get you those insights you really need.
Yeah, helping you stay truly well-informed.
So today, we're digging into a headline that's definitely been making some waves. The U.S. imposing 25% tariffs on South Korean imports.
Effective August 2025. And it's aimed squarely at tackling that huge bilateral trade deficit. What is it, $66 billion?
That's the number. It's massive.
It really is. And it's a genuinely complex situation, constantly evolving.
So our mission today in this deep dive is really to unpack this whole trade relationship, the U.S. and South Korea.
Right, looking at how these new tensions are hitting key industries, cars, tech, materials.
And what does it all mean for companies, for investors, even like the whole global supply chain picture?
We've gathered quite a stack of sources. Recent analysis from A-Invest, detailed stuff from the Korea Economic Institute of America, KEI.
Plus government data, Census Bureau numbers, Congressional Research Service for historical context, lots of good material.
And our goal really is to boil it all down, give you those crucial nuggets of insight.
Help you understand how this really long-standing alliance is trying to navigate some pretty intense new economic pressures.
Definitely.
Okay, so let's jump right in. The immediate flashpoint, the current landscape, it really feels like an economic chess match, doesn't it?
It does. And the latest big move, that was July 7th, 2025. President Trump's letter to South Korean President Lee Jae-myung.
The letter confirming those 25% reciprocal tariffs are going ahead. August 1st, 2025, after that pause.
Yeah, and crucially, sounds like no more extensions are expected. This is it.
So this fits into a broader strategy, right? The Trump administration's tariff approach.
Exactly. You can kind of break it down into three main categories. First, you've got universal tariffs, sort of a baseline 10% floor.
On goods from anywhere, basically.
Pretty much. Then second, these reciprocal tariffs, like the 25% hitting South Korea, aimed specifically at countries with big goods trade surpluses with the U.S.
Okay, and the third type, that's had a big impact already, hasn't it?
That's right. Industry-specific tariffs. The big example being the Section 232 tariffs on steel and aluminum.
Those are the national security ones.
Yeah, based on imports being a potential threat.
Yeah.
And those have stayed in place even during the pause on the reciprocal ones.
And they hit South Korea hard.
Oh, yeah. Impacted nearly 40% of South Korean exports to the U.S. in 2024. So, a major factor already.
So what are the stated goals behind all these tariffs? What are they trying to achieve?
Well, the official line is, first, incentivizing reshoring, bringing manufacturing back to the U.S. reindustrialization.
Making it more appealing to build stuff here instead of importing it with tariffs tacked on.
Exactly. Second, increasing government revenue. There's been talk of funding things like the Big Beautiful Bill.
Right.
And third, just generally pressuring other countries on their own trade policies, applying leverage.
Now, the administration, particularly the USTR, they've called the trade relationship far from reciprocal.
Right, citing various tariffs, regulations, non-tariff barriers in South Korea.
But, and this is interesting, research from KEI paints a really different picture, doesn't it?
It really does. Their estimate. South Korea's effective overall tariff rate on the U.S. was actually super low in 2024, somewhere between like 0.19 and 2.87%.
Wow, that's a huge difference from the rhetoric.
It's a crucial distinction, and what's also really insightful is looking at recent deals the U.S. struck with the U.K. and Vietnam. They kind of give us clues.
How so?
Well, the UK deal, it focused more on market access improvements.
Yeah.
It had limited auto exemptions, like 100,000 cars.
Okay.
And it set up a way to potentially negotiate an alternative to those Section 232 steel and aluminum tariffs.
And Vietnam, that was different again.
Very different. Vietnam agreed to totally eliminate its tariffs against the U.S.
Wow, completely.
Completely. In return, the U.S. lowered its reciprocal tariffs on Vietnam, though not entirely, from 46% down to 20%.
Okay.
And significantly, there was a big 40% tariff added on transshipments of Chinese goods coming through Vietnam to stop circumvention.
Hmm. So, what does this mix of approaches tell us about potential talks with South Korea? Especially given, their links to Chinese supply chains.
That's the big question, isn't it? It suggests the U.S. approach is flexible, maybe even tailored, but also focused on specific outcomes like preventing transshipment. It makes predicting the path forward for South Korea quite tricky.
Okay, so we've covered the latest moves, this tariff situation, but to really get why this is causing such waves, we need to understand the foundation, right? The KORUS FTA.
Exactly. The United States-Korea Free Trade Agreement, KORUS, it's the cornerstone, went into effect back in March 2012,
And the goal was?
primarily to eliminate tariff and non-tariff barriers across goods, agriculture, services, and importantly, to strengthen the overall U.S.-South Korea alliance.
And it's a big one, right, in terms of trade volume.
Oh, yeah. It's actually the second largest U.S. FTA by trade flows. Only USMCA, the deal with Canada and Mexico, is bigger.
But it hasn't been smooth sailing. It has a bit of a contentious history.
Definitely does. Remember the renegotiations under the Trump administration back in 2018?
Vaguely, yeah. What changed then?
A couple of key things. They extended the U.S. tariff on light trucks way out to 2041,
Okay.
and they doubled the number of U.S. cars up to 50,000 per maker that could be sold in South Korea without modifications as long as they met U.S. safety standards.
Right. But the really fascinating part, maybe the core issue now, is the trade deficit debate.
Absolutely. Because since KORUS took effect, that U.S. trade deficit with South Korea has just ballooned.
What are the numbers again?
It went from minus $16.6 billion in 2012 to minus $65.9 billion in 2024.
Wow.
And already, just in the first 5 months of this year, 2025, it's hit minus $25.2 billion.
So that's the figure the administration points to, the USTR, President Trump.
Yeah.
They see that rise as proof KORUS failed.
That's their argument, yes.
Yeah.
That the agreement hasn't delivered the balanced trade they wanted.
But there is another side to this coin, a very different view.
There is. Many economists and organizations like the U.S. International Trade Commission, the USITC, they argue KORUS tariffs themselves haven't really driven that deficit increase significantly.
So what do they say is driving it?
They point more to broader macroeconomic factors, things like national savings rates, investment rates, factors that affect the overall economy, not just one trade deal.
And they make comparisons, don't they, with countries we don't have FTAs with.
Exactly. They highlight that the U.S. deficit with countries like China or Japan, where there's no FTA, is vastly larger.
Right. What were those numbers again, for context?
We'll take 2016, for example. The deficit with South Korea was about $27.7 billion, which sounds big, but it was only like 3.8% of the total U.S. deficit that year.
Okay.
Compare that to China at $347 billion, or Japan at $68.9 billion in the same year. It puts the South Korea number in perspective.
And didn't one report even suggest KORUS helped the trade balance?
Yeah, there was a USITC report back during the Obama administration that estimated KORUS actually improved the trade balance by about $15.8 billion back in 2015.
So the core insight here seems to be this focus purely on the bilateral deficit might be missing the bigger picture.
That's what many economists suggest, that overall domestic economic health, savings, investment, those things are much bigger drivers of trade balances than the specifics of any single trade deal.
Which fundamentally challenges the whole premise behind using these tariffs to fix this specific deficit.
Precisely. It's a really central point of debate.
Okay, let's shift from policy papers to the real-world impact. The factory floors, the boardrooms. How are specific sectors actually adapting? Starting with automotive, you called it ground zero.
Yeah, it really is. And the big strategy we're seeing from South Korean automakers, particularly Hyundai and Kia, is localization, building here in the U.S.
Makes sense. Avoid the tariffs that way.
Exactly. Look at Hyundai's investment, a staggering $21 billion pledged in the U.S. That includes a massive $7.6 billion EV plant down in Georgia.
Is that running yet?
Reports say it actually began production back in October 2024.
So they're ahead of the curve.
Seems like it. This helps insulate them from tariffs, obviously, but also lets them tap into that booming U.S. demand for EVs. That market grew 35% just last year.
And the markets noticed this strategy.
Apparently so. Hyundai shares actually stabilized after the tariff announcement. Seems investors have confidence in their made in USA approach. Kia is also making kind of a contrarian bet, focusing on cost cutting and its own U.S. expansion.
And the trade data reflects this history before the tariffs became such a threat.
It does. Remember, the U.S. dropped its 2.5% passenger car tariff back in 2016 under KORUS. South Korea dropped its 8% tariff the same year.
Right.
And after that, U.S. auto and parts trade with South Korea basically tripled between 2011 and 2023. U.S. imports hit $42.2 billion last year.
So the takeaway for auto is pretty clear. Build it here or face the consequences.
That seems to be the emerging reality. Localization is looking less like an option and more like the survival strategy.
Okay, what about tech? Semiconductors, that whole area.
Tech's interesting because it's kind of split. You've got victims, but also beneficiaries.
How so?
Well, the big South Korean chip makers, Samsung and SK Hynix, they're somewhat shielded because they've already invested heavily in U.S. factories.
Right, Samsung's huge $17 billion project in Texas, SK Hynix with nearly $4 billion in Indiana.
Exactly. And those investments got a boost from the TIPS Act, the legislation aimed at boosting domestic chip production.
So this positions them well.
It does for making next-gen AI chips right here, and crucially, reducing their reliance on Chinese supply chains, which is a big geopolitical goal too.
Any specific company indicators there?
Well, SK Hynix, for instance, apparently trades at a significant PE discount compared to its peers, around 4.5x. Some see potential for a rebound there if trade tensions eventually ease.
And who benefits on the U.S. side?
U.S. chip makers like Intel, equipment makers like Lam Research, they potentially gain market share, as these tariffs might deter some South Korean imports or at least complicate things for them.
You mentioned a wild card.
Yes. Samsung Global Battery, a mid-cap Korean company. They're interesting because they show real supply chain ingenuity. They have global operations, and they've seen strong growth, like 12.5% CAGR in AGM batteries for EVs.
What are AGM batteries again?
They're a type of sealed lead-acid battery, often used in vehicles with start-stop systems, and increasingly finding roles in EVs, too. Shows diversification.
Okay, moving on to materials. Steel, critical minerals. Sounds like another battleground.
Definitely a battleground for these reshoring efforts. U.S. steelmakers, think Nucor, they obviously benefit if automakers and others start sourcing more steel domestically.
But South Korean suppliers aren't necessarily shut out.
Not entirely. Someone like POSCO, a major South Korean steel producer, can also benefit by supplying U.S. auto plants directly from potential U.S. facilities or working around quotas. It's complex.
And those Section 232 steel tariffs are still key here, right?
Absolutely. South Korea still faces that import quota capped at 70% of their average exports from 2015 to 2017.
And I'm not happy about that.
No. South Korean officials have been pushing the Biden administration to revisit it, especially since the EU and Japan managed to negotiate less restrictive arrangements.
What about critical minerals like lithium? Prices have been weird there.
Yeah, lithium prices have been down, but most analysts see that as temporary. The long-term demand from EVs is expected to be huge.
So companies positioned for that long term are still okay?
Right. Companies like Rio Tinto, Lithium Americas, especially those with strategic partnerships, seem well placed. And then you have Freeport-McMoRan, FCX, with its big exposure to copper and cobalt, also essential for EV batteries. They benefit from that demand regardless of lithium price swings.
Okay, one more sector.
Yeah.
Agriculture. Sounds like a mixed picture there.
Very mixed bag for U.S. farmers and ranchers. On the one hand, the U.S. ran a solid $6.2 billion agricultural trade surplus with South Korea last year in 2023.
Which sounds good.
It does, but digging deeper, one source we looked at indicated that overall U.S. agricultural exports to South Korea have actually fallen by 9% since 2011, despite KORUS.
Fallen. Why? What specific products?
Well, U.S. corn exports are down significantly, like 52%. That's partly due to things like big global harvests elsewhere, but also South Korea's domestic rice policy, which impacts feed demand,
Okay.
and poultry exports plummeted 86%. That was largely due to a ban related to bird flu outbreaks in the U.S.
But there must be some winners, too.
Oh, definitely. Beef is a big one. U.S. beef and beef product exports are up 56%. That's linked directly to KORUS, phasing out South Korea's 40% tariff on beef. It's said to be eliminated entirely by 2026.
Okay.
And fruit and vegetable exports are also up by about 42%. So some definite gains.
It's complicated, though, by South Korea's own policy.
Yes, beyond the FTA tariffs, South Korea still has high average agricultural tariffs overall, around 54%. Plus, things like a 10% VAT value-added tax and various excise taxes can impact the final price and competitiveness of U.S. exports.
Now, from the South Korean side, you mentioned a think big strategy for negotiations. What does that mean?
It's about looking beyond the immediate demands, trying to understand the other side's true underlying goals and priorities, which might not be explicitly stated.
Okay.
And then framing your own position not just as demands, but presenting a just cause, a reason for the counterpart to accept it, maybe linking it to broader shared interests.
Like cooperation on North Korea, maybe? As seen in past U.S.-China talks?
Potentially, yes. Finding that larger framework where a deal makes sense for both sides beyond just the trade numbers.
Because ultimately, South Korea needs stability for those huge long-term investments they're making here.
Absolutely. They need clarity and predictability. That's a critical piece of the puzzle for them.
Okay, so wrapping this up, what does this all really mean for you, our listeners?
Well, the bottom line is this U.S.-South Korea trade relationship, even with KORUS as its anchor, is incredibly dynamic. It's a constant interplay between economic interests and broader geopolitical strategy.
Right, these new tariffs are creating immediate challenges, definitely reshaping supply chains.
But at the same time, you have this deep-seated cooperation, these huge strategic investments that are also powerfully shaping the future of the relationship. It's not just about conflict.
So whether you're watching the markets, thinking about your own company's supply chain, or just curious about how big international alliances work under pressure.
Understanding this deep dive gives you a really critical perspective on that balancing act between competition and collaboration.
And things are moving fast. The next 18 months could genuinely redefine global supply chains. So, here's a final thought to leave you with. As we look ahead, what do you think is the single most important factor?